was a big week in the semiconductor industry, maybe one of the biggest that we've ever seen. We obviously have a lot of the fallout from DeepSeek. We'll talk about that as it relates to Nvidia. Talk about some of the headlines that have crossed from Nvidia that Jensen Huang reportedly met with the president. We'll give you an update on what potentially went down in that closed door meeting. We'll discuss a little bit more in depth of what DeepSeek means, not only for the semiconductor industry, for Nvidia and other investments. Talk about some of the conclusions that I think we can comfortably draw. Many of these carry over from last week, but we'll discuss that. We'll talk the broader framework of where we're going with this kind of AI revolution, if you want to call it that, where we are in these different stages. Also, what this means from an investment standpoint. We also got earnings from most of major big tech. We're still waiting to hear from Amazon and Google. That'll be later this week. That should have some ramifications on the semiconductor industry, but we heard from Microsoft. And I think what we heard from Microsoft, we can also draw some dots and connect some dots to some stocks that will immediately benefit. And I think we saw that right away when ASML reported their earnings this week. I'm not going to go in depth on their earnings on today's video. I'll have links down below to Intel, ASML. There might be one other company. I'll put that in the first pinned comment if you want to go through there. No reason to go through their earnings again, but obviously they were fantastic and the stock performed really nicely, up over 9%. Intel's moving in a different direction, kind of a different story. On today's video, there are 3 stocks we are going to talk about from an earnings perspective. You have Celestica CLS. This thing was on a wild ride. I mean, it was up at 120, went all the way down to 80, 90 bucks on this DeepSeek news. And so those of you that had your head on straight, we sent out a newsletter. We posted videos here on the channel and was like, this stuff's a little crazy. You can step in here and buy the dip. You stepped in, bought the dip. This one got back all the gains. It just shows you, if you can have knowledge and if you can connect the dots in the industry. And when I sent out my newsletter on this, so this was on a Monday of this last week, when I sent this out, I basically described that semiconductors is one of these industries many investors don't understand. They might understand a little bit what Nvidia does. They might know a lot of what Nvidia does, but they don't know what ASML does. They don't know what Intel does. They sure as heck doesn't know what Celestica does or Broadcom or Lam Research or any of these other companies that we'll talk about on today's show. So if you have that knowledge, boom, you could have made a real quick buck this week, and lots of you did. So, props to yourself, keeping yourself informed. We'll go through the CLS earnings. We'll take a look at them. Interesting company. I'll categorize what type of investment this is. CLS is a very specific type of investment. I'll give you a little spoiler alert. This is not a buy and hold forever investment. And so we need to make that clear, and we'll show it to you when we get to the financials. Lam Research also reported their earnings. Interesting company. When you look at their product mix or their regions that they sell into, big China. We'll talk about that when we get to President Trump and Jensen Huang's meeting this week. Could be impacting this company's valuation. We'll talk about that. We also heard from KLA Corporation, ticker KLAC. Over the past year, shares are up 24%. We got a $100 billion valuation on this one. We'll dive into their earnings as well. And then we'll look at all these companies technically as well. What is going on, investors? Hopefully you guys are doing well out there. Long intro. Got a lot to talk about. Get into it right now. Start with the big boy like we normally do, and that is Nvidia. Saw its shares like on a wave of a roller coaster this past week. Up and down for Nvidia. I'm noticing the forward multiple is ticking up as you have the expectations start to come in a little bit. If we dive into those earnings estimates, let's just take a look here. We've talked about this on previous shows, and I do know that you've seen a tightening up of expectations as we move into the back half of this year. At one time, we were looking at massive like $60-70 billion spreads on the revenue estimates. They are still dramatically wider than what you normally see in a large tech company. As we move into the fourth quarter of this year, even the third quarter, you still have 15, 20, nearly $30 billion gaps between the high and the low estimate. That means the consensus sitting right around $50-55 billion as we move into the back half of this year. This is still up in question. I think for the most part, this is probably a decent estimate. and it'll be difficult for it to go lower just based on the stuff that we heard from Microsoft. And I think we'll anticipate that we'll hear from Amazon and Google in terms of CapEx spending. We also heard from Meta this week. They dramatically ramped up their expectations for spending. Obviously, though, people are spooked a little bit by this DeepSeek news and that potentially maybe you have a pullback in spending. I don't see any evidence of that, and I don't think that will actually happen. So this 50 billion mark is probably the baseline, with the upside that it could potentially get into 60, 70 billion dollars in Nvidia. And given Nvidia's gross margins, that is obviously a wild amount of profit. Now, Jensen Huang reportedly got on his jet and went to the White House to meet one-on-one with President Trump in the White House. Now, after meeting with them, Nvidia put out a statement saying that we appreciate the opportunity to meet with President Trump, and we discussed semiconductors and AI policy. Jensen and the president discussed the importance of strengthening U.S. technology and AI leadership. What DeepSeek did was it might have changed a little bit of the cadence and some of the desires of Nvidia. I think if you would have asked Nvidia 2 weeks ago, do you want access to the Chinese market? Do you want to be able to sell your chips? Because right now, most of you realize this, that the Biden administration put very, very strict export controls on Nvidia chips and across the industry. We'll certainly talk about that when we get to KLA and Lam Research. There are export controls, and they continue to get ratcheted up more and more as China continues to find a way to get access to these chips. Or what Nvidia will do was create kind of a dumbed down version or a China only version of the chip that they're selling here in America. They make some tweaks to it, get around the sanctions, and they sell it into China. Well, what Nvidia saw this week was maybe that's not that great of an idea. Maybe China having zero access to Nvidia chips could be a better strategy, because then just American companies have access to this, and Americans and American companies, they spend like no tomorrow. Okay. These tech companies would gladly spend $50, $60 billion, $70 billion, $80 billion in the case of Microsoft on chips this year. But if China gets access to this stuff, well, they're figuring out ways to do more with less, and they're figuring out a way to do things more efficiently. The Chinese are extraordinarily talented, and they're doing a good job. They're reverse engineering stuff. This is in their culture. This is in their nature. This is what the country does, and it does it very well. And so maybe Nvidia wants to tighten up those export controls. We'll see. Well, we got a response from Trump. The great thing about Trump is he always opens his mouth and he will tell you exactly how he feels. And sometimes he says things that give you a little indication of what's to come. And he said he had a really good meeting with Jensen. He said, I can't talk about it. And then he blurted out that we're eventually going to put tariffs on chips. So that's interesting. How is that going to work? Typically, when Trump is talking about tariffs, he's talking about supplies or product coming from China into the United States. So he slaps a tariff on it, in his eyes, to make the American product more competitive or force American companies to make that product here in America. And so the tariff is from a product coming from China into the United States. Now, it's a little more complicated with computer chips. They're being manufactured in Taiwan. A lot of them get packaged up into China. So Nvidia chips do sometimes make it into China as well. Obviously, when we're talking about devices like the iPhone and personal computers, those also get manufactured oftentimes in China. So I don't know how this tariff's going to work. Is it a reverse tariff where if Nvidia is trying to send their chips into China, that it's coming at a 300% tariff? I don't know. Maybe there's a different word for that. I'm not exactly sure how this is going to work. He throws in oil and gas on the 18th of February. We got a fluid situation. We could have a whole show on tariffs. That's something that's going to be a big discussion on Wall Street next week, as you had those ones slapped on a little bit of China, but also Mexico and Canada. So you have these countries starting to jockey for position, and President Trump is not running for re-election, and I don't think he cares. And so he is going to hold his ground probably a little firmer this time around than we saw last year. So we'll see what happens here. Fluid situation. I would say with the DeepSeek stuff, it's probably slightly easier to connect the dots when it comes to Trump and tariffs and chips and export controls. You just got to be prepared and understand as an investor, there are risks to these types of things. If you can't stomach the risk, if you can't stomach the ups and downs, You put stop losses in. It also probably shows you that your portfolio is not diversified enough as well. That's another thing that I brought up in our newsletter. As I talked about over the past month, I've recommended Starbucks, Louis Vuitton, Chipotle, McDonald's, Nike, Boeing. I mean, these are stocks nobody is talking about, basically. Nobody is talking about and recommending these stocks. It's all about semiconductors. It's all about those stocks. Nobody's buying these kind of beaten down names. But the truth is, I've actually been buying these stocks, these core stocks, these retail focused, American type focused stocks. I've been buying these more than I've been buying semiconductor stocks. And so as you have gyrations in the semiconductor industry, some of these other stocks have actually been performing relatively well. And so you should have a diversified portfolio. I sometimes see comments where I'm only in Nvidia. I'm only in Nvidia, Tesla, and Palantir. And hey, when it works, it's great. You look like a genius, but when things go against you, it can go against you rather quickly. So think about your diversification. Think about your level of risk. If you can't stomach the ups and down, it means two things. Number one, you need to pull some chips off the table. If it's physically affecting you, the ups and downs and the volatility of the stocks, if it affects you that much, means you're too overweight. You have too much money in that sector. You might want to diversify or go to cash. So you got to think about those things as an investor. But if you're like me, you're comfortably weighted in this stock. Also, always have the attitude. Nvidia stock, actually, my entire stock portfolio could go to zero tomorrow, and my family's still going to eat. We're still have a place to live. We're still going to drive the same car, still live in the same neighborhood. Okay, that's the level of comfort you want with your investings. If you're over leveraged or over kind of tied to this stuff, that's not a good place to be. You don't have to work that out on Monday or next week, but you want to work that out over the next couple of months, because again, this AI race, also with Trump being the president, there's going to be just more volatility. There's going to be more ups and downs this year. Just the nature of how he is going to do business as it relates to Trump. Also, this AI race, we'll talk about where we are in the stages. As you move through the stages here, there's going to be a lot more ups and downs. Now, the conclusions we have from DeepSeek is that China was always going to have their own AI, and it really doesn't impact American companies at all, okay? You look at China, they have their own EVs, okay? They have a ton of EVs in the marketplace. They've got their own coffee shops. They've got their own athletic brands. They've probably the best example. They have their own e-commerce there, okay? Temu, JD, Alibaba, Tencent, Tmall, all this stuff. None of that impacted Walmart. None of that look at Costco stock. Look at Amazon stock over the past 15 years. Has it really impacted any of that? No. Okay, so China was always going to have its own AI. It's its own government. They run things a specific way there, and it's their country, it's their people, it's their life. They deserve to do that. China was always going to have its own AI. American was always going to be shut out for the most part from accessing that and providing AI to the country. Just the bottom line, okay? LLMs running locally on your phone, on your device, on a robot, on the edge, in your car. This is going to be a big business. We're just seeing this play out right now, okay? So DeepSeek being open source, that certainly is nothing new. DeepSeek being able to run on the edge or locally, that's nothing that is going to be new. This is all stuff that's going to play out. China's going to have their own models that run locally and on the edge. America's going to have their own LLMs that run locally on the edge in robots. They're going to be different. Access to both markets is going to be restricted, and that's what's going to happen, okay? Running the AI application, which is typically referred to as inference, this is where the big money is going to be made, both on the hardware side, but also the software side, okay? So as you're running these applications, you can charge money for them. You can charge a monthly fee. A SaaS software basically just will get a new shot in the arm as it relates to AI applications. And we saw this with DeepSeek, right? So DeepSeek really took over the consciousness, at least of tech forward people, probably like yourself, and maybe the circles that you run in. Now, my wife didn't ask me about DeepSeek. My mom didn't text me about DeepSeek. So this is stuff that isn't quite mainstream. That's why I have the progress of everywhere. We're not even close here. We're not even close. Just turbo nerd tech geeks and nerds like you and I, we're paying attention to this stuff, but the general public still is not. But what we saw with DeepSeek was it got so popular, they had to shut the site down. And it wasn't anything to do with other than that they didn't have enough compute power. And so as these applications become more and more popular and more people use them, that is incredibly expensive. Okay. When you look at ChatGPT, if you don't have a subscription, they limit you. They're not limiting you for any other reason other than it's expensive. Okay. This is not like a typical Google search or anything like that. It's expensive to run these large language models and run these applications. Okay. I have to pay to access some of this stuff because it's expensive. The API calls are expensive. And if you have millions of people accessing this, you can rack up a big bill. It's just from a business standpoint, you have to charge for this. So that's where you're going to have big money to be made. And we still have a compression and cost that is going to have to be made. And the compression and cost comes as a scale up of hardware. More LLMs means more inference, more Nvidia, more AMD, more Intel even. Okay. Now we have this broad framework of what's happening here. It's called hardware, software everywhere. It happens in every technology revolution. Going back to the personal computers in the 70s and 80s, you had, initially the biggest news in computers was the personal computer. Okay. For those of you that are my age, certainly if you're a little bit older than me, you remember paying thousands of dollars for a personal computer. Okay. And it was this big machine. You had the floppy disk. Okay. And it was a luxury. It was literally a luxury to have one of these things. Okay. As time went on, the personal computers came down in price. Now, they practically give those darn things away, and the money is made in the software. That's typically the second phase. So you've got to have the hardware, then software is made for the hardware, things like Microsoft Office, Microsoft Word, PowerPoint. As we move into the internet age, a piece of software is very similar to like a Google or an email platform, all those types of things. Same thing happened with the iPhone. The iPhone was initially a piece of hardware that was a luxury thing. For those of you, again, not my age or certainly not over the age of maybe 30, you don't remember when the iPhone was launched, it was a luxury thing. Now I show up at schools and kids have iPhones. Okay, this was something that was absurd back in the day, right when, 2007, 8, 9, when the iPhone initially launched. Then you have a bunch of applications and software layered onto the iPhone, and then eventually the darn thing's everywhere. Your grandma has an iPhone. Okay, your grandma has a personal computer. Okay, same thing with AI. But the exciting thing for you as an investor, we're still in the hardware stage. I think we're barely maybe 30 or 40% through on the build out. We'll talk about that as it relates to Microsoft here in a second. The software phase is still in its infancy. Okay, we're still figuring out LLMs. We're still trying to perfect them. We're still trying to get them into a package where they work. So the software phase is still very early. The everywhere phase hasn't even started yet. In the everywhere phase, I categorize it. There's probably a better technical definition of this. This is when your mom, your grandma, your wife who doesn't pay attention to any of this stuff, they're using AI every single day. Okay. That is when it's everywhere. When turbo dorks and coders, and I say this affectionately because I'm one of these people, when we're using the stuff, it's not everywhere. Okay. When everybody everywhere is using it, very similar to an iPhone. Again, only initially the turbo geeks had an iPhone and bought an iPhone. Same thing with personal computers. Same thing with the internet. Only turbo geeks used it, and now everybody uses the internet every single day. So we're moving in this direction. And as we move through this direction, the investments change. The hardware becomes a little less focused and a little less better of an investment than software. As we move through these, I'll explain these. As we get into our earnings videos today, we start talking about companies like Celestica, their window to profit is limited in the hardware phase. Okay. So you have to be comfortable. If you're buying some of these stocks, you have to be comfortable selling them at some point. Okay. This is not destined to become the next Google or Tesla or Microsoft or Amazon. This is going to support a specific area of the build out, which we know is going to happen. They're going to profit wildly. You have to capture that profit and then move on. So we'll talk about that. Now, one of the reasons why we know this phase is being built out is Microsoft has committed $80 billion in data spending this year. Through the last 6 months, the company's actually only spent, I say only, but when we're compared to 80 billion, They spent 30.7, so not even half of the total that they've committed. So you really don't need a calculator to know when the surge of orders is coming. That's, kind of what we talked about with Nvidia. The back half of this year is probably still underestimated by Wall Street. And then Nvidia's next quarter, maybe even their quarter after that, the next 2 quarters for Nvidia, might not actually be that great, but they probably will have a window and probably will tip off investors to showing you that the last 6 months of this year are probably going to be absolutely fantastic, as you see a surge in spending that is already basically committed by these companies. It is going to be front run by the equipment makers. Okay, so if you want to play this, okay, Nvidia might not actually be the best way to play it. I actually don't think it's the best way to play it. This $80 billion in spend by Microsoft, we'll hear from Google, Amazon, all of these major players. They're going to spend this money, okay? The initial spend supports equipment makers because that is what needs to be ordered first. So when Nvidia sees a surge of orders coming in, it's probably trickling in now. Most people are going to realize it in the spring, fall, summertime of this year. Well, what has to come first is the equipment to make those chips. So companies like ASML reported earnings this week. It was fantastic. Shares were up 9.5%. No surprise, because again, their demand is going to front with that. I would say with a company like ASML, this is just given their moat around their business and that they really don't have a lot of competition. This is one of the hardware makers. If you're a buy and hold investor, this is one of the stocks in the hardware space where or the hardware equipment maker space, that you could actually hold this one for a long period of time. The rest of these we're going to talk about are short-term plays. Short-term could last anywhere from 6 months to 12 months to 24 months. But I think you'll need to sell some of these other equipment makers because their business is going to be very cyclical, okay? And right now we're up into an upswing, but when it goes to a downswing, you don't want to be left holding the bag in those types of stocks. ASML is probably the exception of the equipment makers because they make a product that is so unique and has such a wide moat around that. They really have no competition, at least on the high end. It is the one equipment maker that you can kind of buy and hold. Intel, I did an earnings video, doesn't really relate to the discussion we have now. They will find their way into the data center as we move into the software phase, everywhere phase. A company like Intel will benefit, but this company has so many other things going on with it. From like a management perspective, CEO and the direction of the company, this is just a special situation. You guys probably know I'm in this one. It's a special situation. It's a tiny portion of my portfolio. If the stock doubles, I'm happy, but I'm not going to buy like a new watch or something. I don't have that big of a position in it. I have other positions where I do have that big of a position. Not with Intel. It might be like a new sweater, or maybe my wife gets a new something, Maybe she will watch this and hold me to that. Celestica reported earnings. Ticker symbol CLS. You'll know we've recommended this stock. And it was on a ride this week. Man, hopefully you guys were able to stomach this one. You were at 124, went all the way down to 87. If you were like me, you were like, I think I'm going to buy some of this. Bought some of this one, rode it up to 128. I didn't sell it. I'm going to hold it because there are some reasons to hold this one, I think, for the next quarter or two. Company had revenue in the most recent quarter at $2.5 billion. So you got a small company here, okay? It's worth $14 billion, 25 times forward on the valuation. It's not a big company, so just something to think about. Also, this is a component supplier. You'll see it when we get here to the financials. These are not software margins. These are not Nvidia margins. These are not ASML margins. So I want to be clear about this, okay? When I recommend a stock like Celestica, this is not a buy and hold forever stock. This is a tactical way to play the upside in the hardware, software, everywhere phase that we're going through. If you don't like to be tactical, if you just like to buy stocks and forget about them, I totally understand that. I would say this is not a stock for you, or you're going to need specific guidance. If this is something that is new to you, this is more of an advanced strategy. I probably should make this more clear when I recommend these stocks, and I'll do that more so in the future. But a stock like this is very tactical, okay? We are playing a very specific trend that we know is going to play out, and we have our long-term holds. We'll have our long-term stocks that we're going to just continue to hold through this wave, through the ups and downs. but we can capture even more upside by knowing the industry really, really well. And CLS is one of the best ways to play that. And I think this is probably at the shorter term, a 6 to 12 month hold. If the trends really go well, this one could probably stretch out into an 18 to 24 month hold, but you're going to want to take profits. So if you're in this one, don't be scared to take profits. Okay, we'll talk about the revenue in the most recent quarter, which is the Q4, but they also gave us Q1 guidance as well. Consensus was for 2.44, and they're showing you they're going above that. So they gave you guidance between 2.475 up to 2.6 billion. And the company tends to beat by a little bit. So my guess is they're going to be coming in closer to this $2.6 billion number. So that's really good for the company. The expectations, again, for the next several quarters are kind of mid-teens growth. And again, at a relatively okay valuation. It's not wildly overvalued. Company should be able to comfortably hold these levels. Now, company has plenty of cash on their balance sheet. They have some inventory. I noticed a little bit of depletion over the last year. That is probably a good sign and a bad sign. Given the demand that this company is seeing, you probably want them to have plenty of inventory, but it's showing you as inventory is draining, they have plenty of demand there. Total liability is just $4 billion. So that's what makes this company attractive. There are other companies in this space. People say, hey, look at this company, look at that company. The reason why this particular company is attractive is the balance sheet is super healthy. They have plenty of cash. And with cash, I'm kind of counting this receivable number, assuming that the clients, which tend to be relatively higher end equipment makers, they'll be able to pay this bill. And so this will convert to cash at a later date. They also have this inventory based on the sales and demand for the product. This will also convert for cash. So nothing to worry about financially. Very nice company from that perspective. But what you'll notice is this company is not a buy and hold forever because the margins are too thin. So when the business takes a downturn, okay, as we move out of this hardware phase into software, companies like Microsoft are like, okay, we're kind of good. You know, we're going to continue to spend on data centers, but we're not going to go from 30 to 60 to 80. We're going to go from 80 back down to 60 and maybe back down to 40 in the coming years in terms of data center spending. That's going to happen over a period of time. It's anybody's guess whether that'll be 12 months from now, 24 months from now, or maybe even 36, 48 months from now. That's anybody's guess, but we are going to go through that phase. It's just how it works, okay? The iPhone eventually peaks in demand, personal computers peak in demand, and then they start growing at a single-digit percentage. Nvidia's business is going to grow at a single-digit percentage at some point in the future, okay? And so a company like this, which makes very slim margins, they are going to get destroyed on the back half of that. Okay. So these are all things that you really, really need to understand because we have revenue in the most recent quarter at 2.5. Look at your cost of sales, a high, very high, certainly compared to Nvidia and other equipment makers. So gross profit off this 2.5 was just 297. Now, luckily, this is a very streamlined business. Look at their selling general administrative. Actually went down year over year. Research and development just up a little bit. Some amortization, non-cashed up. Earnings from operations, just $200 million. Okay. So of $2.5 billion in revenue, just $200 million flows down. So you're looking at like 10%, actually less than 10% operating margins. Slim margins. Okay. Over at Nvidia, I don't know what the operating margins off the top of my head, but I know their gross margins are 70%. Okay. Completely different business. Okay. That is a business that will last and be a little more durable. Company like CLS is going to get destroyed when the air gets let out of the balloon. So that is what you need to understand if you're buying this one. As your gains go up, your stop loss needs to go up on this one and you need to get out. Okay. Net earnings 151. When things are good over at this company. 151 net income or operating cash flows are 143. They have almost nothing to spend the money on. Say that kind of kidding. They only spent $47 million. That gives them $100 million basically to spend. They bought back some stock. Okay. About 25 million of it. It offsets a little bit of the stock-based compensation over here. Okay. They had 10 million on stock-based compensation in the quarter. They bought back 25 million. So it's offsetting by about 15 million. That's really the only thing that they're doing here with their operating cash flow. They could probably do some acquisitions in the future. They don't quite have the cash for that. They can maybe do some smaller stuff, but this is an equipment maker which will ride the wave as Microsoft continues to bump up their spending. Like I said, equipment makers will front run the surge. They're going to front run the surge. Company like CLS will benefit. Their stock should continue to do well, but you just as an investor, you need to understand that you don't want to get caught on the other side of that because this stock is going to crash. And there'll be people that will say, well, didn't you recommend CLS and now it's down 50%? Just telling you guys, I don't care about the comments, okay? I just want you guys to understand this is the thesis behind this company, okay? Now, moving over to Lam Research, like others in the space, actually did well this week, up over 7%. Also, the company reported their Q2 earnings revenue came in at $4.4 billion. They also gave us guidance for the Q3. The consensus was $4.3 billion. They gave us revenue guidance of $4.65 billion. So coming up over and above that, really positive signs for the street. Now, you can start to do some connecting of the dots. If ASML is doing well, if CLS is giving you higher guidance, if Lam Research is giving you higher guidance, we'll talk about KLA here in a minute. If they're giving you higher guidance, guess what that means? That Nvidia is seeing orders and they are seeing demand continue to increase for their product because they are pushing the TSMs. The TSM goes and pushes on ASML. ASML pushes on the Lam Research, the KLAs, and the CLSs. Okay, that's how this all gets connected. And so you might, in the short term, not see Nvidia benefit, but this is all short-term sighted stuff. If the rest of these supplier makers and equipment makers, software makers, if they're doing well, then it carries over into Nvidia at a later date. So this company gave you strong guidance. The risk with Lam, and I think most of you are aware of this, but if you're not, their biggest region is China. Okay, 31% of their revenue is coming from China. They got a lot of questions about that on the conference call, and I read through the conference call, and just from my read, Lam Research executives were not overly confident about what's happening in China. They were confident that the sales will still maintain, but I think they pulled away about $700 million worth of revenue because of the new sanctions that were put in tail end of the Biden administration. I don't think Trump's telegraphed that he'll loosen those up. In fact, he might ranch it up even higher, maybe even make enforcement of those sanctions even more critical to companies and countries like China. So we'll see. So that is why when you look at Lam Research, you're trading at just 21 times because there's plenty of investors that are like, I don't know. And then even if you look at over the last year, stock actually hasn't done very well, largely, I think, because of that kind of China focus of their business. So if you're in Lam Research and you can grab a profit, I probably would take it. I would put this one also in the cap of a very like cyclical type of business. The thing is this is a great business. Okay. This is just fantastic. Okay. $4.3 billion or $4.4 billion in revenue. Look at your gross margins. So these are the type of gross margins that would be a buy and hold. If the geographical mix was flipped, United States was 31%, China was 9%. I mean, the stock would be 100 points higher. I mean, there's no doubt in my mind. These are incredible margins, 47% gross margins on this one. They're barely spending there. In fact, they spent less on R&D and they spent the same on selling general administrative. They printed $1.3 billion to your operating side. That's 30% operating margins. 30% margins means you take this $4 billion and 30% of it is this money right here, this $1.3 billion. That's incredible, guys. I mean, if you were running a lemonade stand with 30% operating margins, you would try to open up 100 of them, 1,000 of them, okay? Because you would just be printing money. But this is fantastic. Net income, $1.1 billion. Just really, 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 really good stuff. As you can imagine, the balance sheet is really good over here. They do have some long-term debt, but it's offset by cash. Things are good from a balance sheet perspective. It's really just this geographic mix that I think is keeping this one from getting a larger multiple. They've got a ton of operating cash flow. As you can imagine with these types of gross margins, they got a ton of operating cash flow. They're not spending a ton of it on capital expenditures. And you do get the benefit. Some of these companies are doing buybacks and their stocks are like at sky high valuation, sky high prices. And so a longer term might not be that great for you as a shareholder. This company is buying back these shares at this low valuation to a big degree. Okay. They're spending almost all of their operating cash flow on dividends and buybacks. And so you're getting that comfort as Lam Research. But again, over the last year, shares have really gone nowhere. And a lot of that has to do with those China sanctions. So just something to keep in mind. And then finally, we'll look at KLA Corporation. It's ticker symbol KLAC. Over the past year, shares have actually done a little bit better than Lam Research. Their geographic mix a little bit better, but the valuation on this one also not stretched. Just 23 times forward on this one. They also reported revenues and earnings this past week. These were Q2 numbers. Revenue came in at about $3 billion, 23% growth year over year. They beat expectations. They also gave us guidance for the upcoming quarter. I think the expectations from Wall Street was for like under $3 billion. And the company is saying that they'll come in at $3 billion, maybe even a little higher than that. So again, the way you connect the dots, and some of you guys out there, you have kind of the wrong maybe perspective on this. You look at a KLA and you're like, I only invest in Nvidia. I only invest in AMD. Well, okay, that's fine. That actually is not a bad strategy, but that doesn't mean that you don't pay attention to KLA. That doesn't mean you don't pay attention to Lam Research. That doesn't mean that you don't pay attention to the equipment and component suppliers as well. It actually means you pay attention to them a lot more than you pay attention to Nvidia. In fact, I don't pay attention to Nvidia a lot as much as I pay attention to the other pieces of the puzzle, because if the other pieces of the puzzle are reporting earnings and it's going well and they're raising guidance, and then you read on the conference call, very important to read on the conference call, that they are not just raising guidance because of a one-time thing, pull forward an inventory, these tariffs with Trump. This is going to pull forward a lot of demand that's not going to repeat. You make sure that on the conference call, and then you say, oh, well, shoot, if KLA is doing well, ASML is doing well, Microsoft's reinforcing it here, well, then Nvidia is going to do rather well. Those are the types of dots that you have to connect. Again, these are the dots that sophisticated investors do. The Morgan Stanleys, the analysts, this is what an analyst does. The videos that I post here on YouTube, this is not meant for a broad audience. This is not meant for clickbait. This is not meant to reach hundreds of thousands, millions of people on YouTube. I am posting videos for a very narrow segment of investor. If you've made it through this part of the video, you are part of the 1%. You are the people I'm trying to reach. I'm not trying to reach the 99% investors. Those guys go buy courses and they buy GameStop and loser stocks. I am trying to reach the 1% because the 1% has money and the 1% is the type of client I'm trying to deal with. KLA had a great quarter. This is also just a fantastic company from just a gross margin perspective. Revenues came in at this $3 billion. Last year was 2.5. Cost of revenue ticks up with revenue, but across the board, controlling their costs very nicely. These companies are at scale. So when you get that incremental bump on that revenue, it passes through to the income from operations, net income as well. 972 net income, 972 operating income, 824 million on that net income side. I mean, this is great. Okay. Pull down to cash flow. Balance sheet's fine over at this company. Most of your net income flows down to operating cash flows. So that gives the company plenty of money. They don't have a ton of capital expenditures over here. So what are they going to do? They're going to repay debt. They're going to buy back stock and they're going to pay dividends over at this company. So KLA, very, very, very solid company. I'll show you the balance sheet here. You do have plenty of cash. You do have some debt here, but they're kind of whittling that down and they're paying that down. So things are good from all those perspectives. This is a very, very solid company. I meant to look at them technically after we talked about them. My apologies. So we'll jump into KLA and I'll jump back to CLS and Lam Research here in a moment. But KLA is on this larger uptrend. I actually think if you want, you can step in here and buy. We've pulled off of a more recent higher high up here at 887. We're making our way back to kind of the middle bottom. The middle of the channel is here. But what I notice is KLA finds support right at these levels multiple times over the past decade or so. You found support at these levels. If you want to jump in on this one, you can certainly buy that one. We can walk our way back to CLS. I mean, this one has just I mean, this has gone parabolic. You do have some highs that we've just broken through back here. I mean, these are all the way back, I mean, forever. But this shows you, like, you've got to sell this stock, okay? This is a stock you don't buy and hold forever, because this chart on CLS will eventually look like that at some point, okay? Again, I don't know exactly how this phase is going to play out. The DeepSeek stuff, what's happening in China, the sanction, it all complicates it a little bit. It's something I'm thinking a lot. I'm trying to connect the dots as best I can. This is also something very hard to predict. It's just more important to be aware of it, okay? And aware of about where you are in these phases. We know we're not everywhere, because your mom's not texting you about DeepSeek and your wife didn't download it and try to run it on her Macintosh computer. Okay, when we get to that phase, then it's over, and you should have made a ton of money, okay? A ton of money investing at that phase. Okay, so CLS will give this back at some point. In the meantime, you're just going to be riding that bad boy forward. Lam Research is LRCX, I think. Yes. This one also in the middle of the channel. This one can be bought at these levels if you feel like we just made a new higher high up here at 110. So you're buying here in the 80s with the hopes that you're going to make a new higher high at some point, kind of $20 upside. Downside in this one's back into the $59 range. I wouldn't play this one kind of shorter term trade. You could set stop losses on this one. If you buy it at these levels, you could have stop losses probably here at like 70. So you could play $10 to the downside, maybe 20 to the upside. Again, that's more of a trade setup. This is not set up very well for a trade. You get all the way down here, that's your trade setup. But again, you have to factor in the different regions that they're operating their business in. As for the rest of the technicals, we have the SOXX ETF. As you can imagine, I mean, this put up some crazy candles. You were up here and you were down here, and you got these doji and spinning candles. I mean, it takes a chart master to know these two candles. You almost never see that. It's insane. And I'm on a weekly view. You could like put this out on a daily view and you could just see up, down, up, down, up, down, up, down. So a lot of uncertainty here. We are starting to flag sideways a little bit. I do want to point out with the SOXX, the longer term trend is this purple line. Okay, this dates back to the financial crisis. We're expecting, okay, if it happens in the shorter term, it's ugly and it's just this dramatic thing. My guess is you'll just kind of wiggle your way over to this line probably by the end of the year. So just something to keep in mind. SMH, slightly more concentrated, I think, in the higher performing semiconductor stocks like Broadcom, Nvidia, and TSM. This one also, as you can see, is just consolidating. Everybody's like, oh, what happened with Nvidia? Well, Nvidia's at a price that we'll show it to you here. Nvidia's at a price where you were at in September. So it's not overly concerning. What we did on Nvidia, though, is we created this big gap. Okay, when you have gaps in charts, could recognize a reversal. Okay, gaps down, moves lower. Okay, but what also can happen, in fact, it's a little more typical, is you fill these gaps. So Nvidia filling this gap, getting back to the 140s, probably not an over surprise. You are making, I am seeing here, could be potentially, and we're looking at this super micro on, not super micro the company, but on a super micro kind of time frame, is that could be developing with Nvidia. I'll take off these other lines so you can actually see this. Okay, we'll take off that. That's a line you do not want to cross with Nvidia. I'll change this green line to a purple line. That potentially is a trend. You have a low, higher low, higher low. You have a high, higher high, kind of a higher high. Okay, the higher highs are not convincing, super convincing. But if you find a footing here with Nvidia, you should fill the gap up to 130, 140, potentially a new higher high back up to maybe like 155, maybe slightly higher than that. So you can buy Nvidia here. In fact, I'm probably going to do this, honestly. I'm going to have a stop loss at 115. Okay, now I have just to be clear, long-term position in Nvidia. This is a buy and hold stock at least until we get into probably the everywhere phase, because there's going to be a resurgence of demand for the hardware as we move into everywhere, okay? Because right now, the only people, again, that care about it are computer coders and turbo dork geeks like you and me. Eventually, you're going to move to the everywhere phase, and then the companies like Microsoft are going to be like, wow, we have enough demand to meet kind of the turbo geek, but now that the grandma and the mom is using AI, we need to build up our hardware again, and obviously they'll come knock on the door in NVIDIA when that happens. So I have a long-term position in NVIDIA, okay, just to be clear. But what I like to do is I like to trade around my long-term positions. Okay. Because I'm following this stuff. I'm looking at the chart. I might as well make money, right? I shouldn't just sit here and not make money when I can. So I have a shorter term position in Nvidia as well. And I'm going to trade this one. I'm going to have a stop loss at I'm going to do it like $5 underneath with the potential to come up here, fill the gap to 135. That's $15, $16 in upside. So there's 3-to-1 setup, and you do a trailing stop all the way back up into the 150s. So you have 30 to the upside, 5 to the downside. That's 3 to 6-to-1 risk reward. That's how you like to set up your trades. And yeah, I'm going to be putting that on. In fact, I'm looking for, my phone's recording right now. When I'm done recording, I think there's a 24-hour market on Nvidia. I'll probably step in there and do that and get into this trade because it looks good. Folks, that was the Semiconductor Show for Sunday, February 2nd. A long one. This is a 1%er video. If you made it to the end, guys, you're not part of the 99%. You're part of the 1%. The 99% is watching all this clickbait stuff on SoFi and Palantir, and they're going to be watching all that stuff. And I put those videos out there too. You know, I'm guilty of it. But, the videos I like the most are these 1% videos because I'm trying to reach the 1% investor. If I can build up a client base of 1%, investors, then obviously my business is going to be doing really well. So if you've made it this far, I'd love to see you on our journey. I know I keep saying it. We're probably a couple of weeks away from launching our paid service. It's coming. Working on the website, final stages. There's compliance, there's legal, there's LLCs, there are all this stuff. I have investors. I have existing clients. So we're trying to, manage all that, but we'll get there. And I thank you all for your support, and we'll see you again next week. Good luck with your investments.